Hello everyone, Chad Frantzen here, and welcome to the Kingdom Finance Show. Today we are going to reveal what you really need to know about the economy, the stock market, and real estate. And we're going to give you action steps to take right now to become a Kingdom Impact investor. It's time to bring clarity out of chaos. Let's get started. Well, hello everyone, Chad Frantzen, and welcome to the Kingdom Finance Show. I'm really glad you're here. Hey, on today's show, we're going to jump in and talk about what's been happening in the markets and specifically with the economy here in March. We had a Federal Reserve meeting with Chairman Jerome Powell and the Central Banking Committee, and so a lot of news that we want to talk about for that as it relates to making sense of making money for making a difference. And if you're like me, it's hard to distill all the noise and the news that is out there and to use your conservative values to make wise choices with your companies and your resources and your giving and the things that you want to stand for and be a part of. So let's go ahead and jump in. So we're going to talk primarily just on what's happening with interest rates, what's happening with the Federal Reserve, and really our outlook, my opinion on that. Again, not giving you formal financial advice on the show. Obviously, if you want to connect with our team and learn more about investing with your conservative values, if you want to learn more specifically what types of investments we're looking at, we'd love to connect with you one-on-one and provide you that type of service. Best way to connect with us, go to wealthbuilders.net/invest. We have a free download available there for you, and our team would love to connect with you. So again, part of, I think some of the application from the Kingdom Finance Show is, okay, Chad, how do I take this and actually put it into practice in my business, in my ministry, in my personal finances? And so that's why we have the team at Wealth Builders Investments to assist you with that. So please follow us on the show and connect with us online, wealthbuilders.net/invest. Get your free download. And you can also schedule a complimentary financial consultation if you want to know specifically what's some advice for you based on where you are. Everyone's in different parts and stages of life and work and family. All right, so let's jump in. When we started 2024, ending 2023, the prevailing consensus was that there would be eight interest rate cuts in 2024. If you looked at the bond market in particular and looked at what it was pricing in, we started the year with the expectation that there was going to be as many as 8 interest rate cuts for 2024. Now, what has happened has been the contrary. Many folks in the real estate community have been really banking on lower rates, lower mortgage rates, et cetera. And that is going to happen, but it's not going to happen as quickly in the immediate gratification world that we live in that everyone would like to see. Now, we're recording this here in mid-March, right after the Federal Reserve meeting that just wrapped up on March 19th and 20th. And what the bond market, which is a great predictive indicator, it's a very good forward-looking predictive indicator for how healthy the economy is, how healthy the consumer is. 2/3 of the economy is you and I and what we spend on vacations, on vehicles, at the grocery store, restaurants, you name it, right? So that's 2/3 of the economy. And the majority of the economy is small business. Now, we have the major tech companies like NVIDIA and Tesla and Microsofts of the world, but most of the economy in the United States is driven by small business, and it's driven by the consumer. So as the consumer goes with their sentiment and the small business owner, their sentiment, their outlook, on things, so goes the economy. Now, the Federal Reserve has been very adamant to channel their decisions for monetary policy in a way that would create what we call a soft landing. And, I will give them credit. They have navigated it quite well. Inflation, however, is not going anywhere. It has certainly come down dramatically from the peak inflation levels. And I always use my air quotes when I say, well, what's the rate of inflation? It's obviously at the government level, much lower. But then when you factor in things like energy cost, food cost, things like that, significantly higher. And I don't think I have to convince any of you of that it just costs more to run your household. And it's certainly more than the 3% inflation, 3 to 4% inflation that's being quoted. So back to the interest rate cut and the whole debate on, hey, when are rates going to go down so I can buy more real estate? When are rates going to go down? How's that going to affect the stock market? How's that going to affect the price of gold? Things like that. Well, sitting here in towards the end of the first quarter, towards the last part of March, the bond market has gone from viewing 8 interest rate cuts likely to there being 3. That's right, 3. So there's been a dramatic shift in what's really expected to happen. Now, the reason is that Chairman Powell, they're committed to a soft landing. So let's establish that interest rates are indeed headed lower, right? By the Fed's projections, they expect the federal funds rate to be somewhere around 4.5 to 4.75 by the end of 2024. Now, that's significantly lower. Right now, that rate is closer to 5.25 to 5.5% on that. So, I think interest rates are headed lower. They're not headed as low as everybody wants them to or as quickly as everyone wants them to, right? And I think, what we likely will see is 2 to 3 cuts. We have multiple Federal Reserve meetings coming up, which I'm gonna share those dates here in a minute. But the economy itself is still pretty resilient. It's not headed to a full blowout recession anytime soon, although there's a lot of cracks in the sidewalk when it comes to the economy. When you look at spending by big companies, when you look at small business outlook, it's not a bed of roses, as they say. Now, inflation has eased, but the Fed's target of 2% is what they want to see. That we are not near. And in fact, we continue to see some pretty stubborn inflation numbers coming out in the economic data on that. So inflation's going to be with us for a while. And so what that means as investors, as business owners, is interest rates are going to come down, but they're not going to come down as quickly as we would like, and we are going to be in a higher for longer theme when it comes to interest rates. So if you're looking to borrow money for your business, for real estate, you're looking at what's going to be the general monetary policy. Chairman Powell, even just reading one of his quotes, he says that they're strongly committed to returning inflation to our 2% objective. And by the Fed's own estimation, in their minutes from their meeting, they don't see this happening until 2026. Okay, so we're in the first quarter of 2024 on that. So realistically, even in the eyes of the Fed, from here, we've probably got a good 2 years of stubborn inflation and interest rates still being higher. Now, they are going to come down. I want to be clear. We think there'll be 2, if not 3 rate cuts this year. And I think that could potentially happen in June or July. When that will happen, I do think the September Fed meeting, which comes right before the election. I do think we'll see a rate cut then. Take that for for whatever you want. The Fed is not supposed to be political or biased by either side, but I do think we'll see one or two cuts heading into the election, and then potentially one more. We have Federal Reserve meetings in November and December, and we'll probably see another one there. So that is going to help. So for those of you that follow that, that is good news. But I do want to encourage you, as you're looking at how to build your financial portfolio, how to build wealth, how to preserve wealth, there's going to be certain strategies and techniques that you're going to use when rates are going down and not going down as fast as they increased, right, over the last few years on that. Banks are still an issue. One of the things that I believe will hamper the economy is there continues to be some major problems with some of the regional banks. And we saw this about a year ago with Silicon Valley Bank and Signature Bank. We saw a few of those, but there is a watershed moment coming for a lot of regional banks that have a lot of commercial real estate in their portfolio, and specifically, large office commercial real estate. So if you go in any of the large office buildings in the city near you, if you were to walk through some of those, which I have, they are mainly a ghost town, very low occupancy rates in the high-rise office buildings. And so a lot of these regional banks and the big banks too, they have debt on these assets, and that debt that they're lending on is coming up for renewal. It has balloon payments. And so over the next, this year, 2025, 26, a lot of these banks are going to be turning over their portfolio with these debts that they have. And a lot of the owners of these large office buildings are not going to refinance that mortgage on that large of a office property that's going to be 20, 30, 40% occupied, right? So there's going to be a major moment here where banks are going to see some defaults to the extent that they are higher. Some of these banks will be in a world of hurt on that. So that is going to impact the overall health of the economy. I just want to point that out. That's something that when those moments happen, the Federal Reserve will have to react, which they did before last year when the first round of regional banks went under. So that also is going to impact interest rate policy on that. There is no more subsidy. So coming out of the regional banking crisis, there was I call it a subsidy, but the Federal Reserve, the money that it lends to other banks, they had reduced that rate to help out some of these banks with a lifeline. That has now since expired. That expired here just a couple of weeks ago in March of 2024. Now, the big news for 2024, along with what's happening with the economy and interest rates, is the presidential election in November. So we do fully expect a lot of volatility in the markets as we head into the fourth quarter. And so I really want to encourage you to be prepared. Asset prices for stocks, big tech, crypto have continued to rise, some in very dramatic fashion. Real estate has started to turn in certain areas, and then there are some areas where there's a lot of value still, where there is inventory for picking up real estate, single family and multifamily on that. Now, that being said, the big thing we're all watching is how is the presidential election going to unfold? Now, don't think for a second that the Federal Reserve is not going to make decisions on their interest rate policies that will not be political. So that's why I do believe that with the Biden camp promoting Biden economics and how strong the economy is, there will be pressure for the Fed to lower rates before the election to get some good talking points on that. Now, I do believe whether rates are going down, whether they're staying stagnant, or whether they're up or down, right, that there are investment opportunities. So one of the things, just as a takeaway from this, let me try to summarize some of this. One, I want to make sure you have your personal financial plan put together, right? Now, no one knows what the future holds, right? We need to trust in God. We need to have wise counselors around us. We need to be thoughtful and prayerful about how we run our companies, how we manage our finances and investments, and the timing is really key because for our clients at Wealth Builders Investments, we keep a large amount in cash management, and we're earning 4 or 5% on it, but we're looking for the right timing for some particular asset classes that we want to invest in. Now, remember, you make your money from an investment standpoint when you buy, right? It's when you buy that you're really dialing in a good purchase price, no matter what it is. This could be stocks, bonds, real estate, gold, crypto, and then how much you make on the top end is really determined by when you buy. I don't think I have to preach on that. I mean, everyone knows that if you've invested in the stock market or real estate markets in the past. So let's summarize. The Federal Reserve Chairman Powell's press conference that came out this past week of March 20th. Couple of key points. One, reducing interest rates too fast would reverse the progress they've made on inflation, right? So that was one of the key takeaways from that. Second point to that is that interest rates, as they currently are at likely their peak level. So thank God. We don't really want to see interest rates higher, although many of you who lived as a young adult, middle-aged adult in the 80s, late 70s, early 80s, there was interest rates even higher than where we are now. So it's not atypical. It's just in the world we live in, we tend to have come to be used to more favorable monetary policies. So point number 3 is the unexpected weakness in the labor market could warrant a response. So the labor market has been fairly resilient, to say the least, and so the jobs report that comes out every month, that is something that the key policymakers are looking at. So if we see a major shift, a major weakness in the jobs report, the unemployment report, those come out monthly from the government, that could shift how the Federal Reserve responds. Right? So they are very well prepared to keep interest rates higher for longer. So I don't want you to be surprised by that. If you read the Federal Reserve's notes and minutes, they have said this and they've said this. Hey, we're fully prepared to keep rates higher for longer. Doesn't mean we won't cut a couple of times, but they are dead set on getting inflation down to 2%. And again, I'm just summarizing what I've talked about here on today's show for the Kingdom Finance Show. And it is probably another 2 years before they get inflation down to that 2% target. So in order to do that, you're going to have to keep interest rates a little higher. So most likely, we think 2 to 3 rate cuts this year, and we'll just have to see where things lie after that, after the election, what their direction will be for 2025. Now, just because interest rates are high or low doesn't mean that you should or should not invest. You always want to have a really well thought out financial plan for how you're going to be diversified. I invest in all types of assets, and so I always encourage friends, clients, people that I meet, you just want to be very diversified. King Solomon in Ecclesiastes 11 said to give, invest in 7 or 8 ventures, for you know not what will come upon the land. And so some of you may love real estate. I love real estate. But it's also wise to have investments in bonds or in precious metals or in oil and gas, in dividend paying stocks. So when you have a diversified portfolio, a couple things happen. One, you create your portfolio to be somewhat all weather, right? Like a four seasons portfolio. So no matter what the season is, you're going to have parts of your overall financial plan that are executing very well, right? And that's really the key takeaway, is not to get, I like to say, not to get over your skis where you get so into real estate or you get so into the stock market or whatever it is, crypto, that then any type of reverberation where that asset class doesn't do well, then you can't hang on. You can't stay in it for the long term. So again, it's timing of when you buy, but it's also having a longer term commitment. It's time in the market, as we like to say. Well, I hope that's been helpful. I wanted to give kind of some summary points from what's going on in the economy right now in the spring of 2024. It's mainly centered around the jobs report and interest rate policy from the Federal Reserve on that. So again, if you have specific questions on, hey, Chad, I really like this episode of Kingdom Finance Show. How do I learn more about the decisions I need to make? Because each of you are in a different situation, right? Different job, different part of your stage of life and work and career and family. So it's a very personal conversation to think through. Okay, what do I need to be doing now? How do I save for retirement? How do I save for college? How do I do proper tax planning or estate planning? And so again, I want to mention as we wrap up here, connect with us online, wealthbuilders.net/invest, and you'll get an email with an opportunity to set up a free financial consultation. So Wealth Builders Investments is a growing RIA. We have more advisors on our team now. And so we're happy to connect with you. Some of you we're already working with, so I want to say thank you for that. And if you have questions on where you are, reach out to our team. We'll set up a review meeting with you. Some of you we've not connected with, so this is a great opportunity just to kind of learn firsthand, okay, what are some of the things I need to do right now based on what I've heard on the Kingdom Finance Show to create a thoughtful financial plan that's in alignment with my conservative values, that's gonna weather no matter who's in office, that's gonna weather the storm of whatever interest rates are doing. So I really want to leave you with that today. I hope this has been insightful. I know we got a little bit in the technical side of things for it, but I wanted to record this show just to capture what's been happening in the economy with the Federal Reserve. Again, the economy is remaining strong. Job market is strong. And the Fed is going to start raising rates. I don't really see that happening before June or July, but we will see a couple of rate cuts, if not three, between now and end of the year. So with that, I will sign off. I want to thank everyone for being a part of the Kingdom Finance Show. Please subscribe to us on social media. Please forward the show to any friends or family you know that share conservative values and they want to bring clarity out of chaos when it comes to their finances, either personally or with their business or ministry. So thanks so much, everyone. I'm Chad Frantzen. I'm going to sign off here, and we'll see you next time on the Kingdom Finance Show. Thank you so much for joining me today on the Kingdom Finance Show. If you enjoyed this podcast, please subscribe and leave us a review. It really helps to get the word out. For more resources on becoming a Kingdom investor and to connect with us directly, visit our website at wealthbuilders.net. That's wealthbuilders.net. We'll see you next time on the Kingdom Finance Show. The content provided is for educational purposes only. We encourage you to seek personalized investment advice from your financial professional. For all tax and legal advice, please consult your CPA or attorney. Investment advisory services are offered through Authentic Counsel, a registered investment advisor. Securities are offered through Cabin Securities, a registered broker-dealer. The content of this podcast does not constitute an offer of securities. Offerings can only be made through an offering memorandum, and you should carefully examine risk factors and other information contained in the memorandum.